Hey, what's going on, everyone? I just wanted to make a quick video about the current price action that we're seeing in the. I'm on Bitfinex. Oh shit! I'm on Bitfinex. Make sure I got my microphone set up right. And what I wanted to show you here is I've drawn out some lines of prior support, as you can see here, here. And we're still. If I have this trend line from when we both first kind of broke out, and we were around the 430 area, and now we made a high of almost 790. I think it was 789, and then we had that whole Bitfinex thing go down where. I'll zoom in a little bit. Happened around here where Bitfinex glitched out, which is kind of, well, that's what we're calling it, glitch finex. But the one thing I try to stress is go above and beyond, trying to get as much information about these markets as you can, because I saw this happening. I pulled out my position at 742 because I read the announcement that Bitfinex sent out saying that they were going to be working on code for 60 minutes. And, if you kind of think ahead, you would come to the realization that after someone works on code, the probabilities are pretty high that there would likely be a crash or some type of glitch. So I thought, what would happen if that were to happen? What are the odds that somebody like myself was reading all these announcements that these exchanges always throw out? And if you're a part of a few exchanges, that's a lot of announcements to try to look for every day. But if you really want to make your best returns, you want to give yourself the best odds possible. So I pulled out my position at 742, and just like I thought, it it glitched out. People panicked. They sold off their position, and then if some of the advice that I would give, if you ever have like a big retrace or a big pullback, it's highly likely that you'll have a bounce, and the bounce or the pivot low will happen somewhere where you had a prior level of support, like we did here in the about the 580 zone. We They tried to break past that, but it didn't really. It sprung back up real quick, so we could tell that the 580 it was going to come past that and likely come to the next zone of resistance around the 530 or 630 or 650 area. And we can see we're kind of around there. You have some swings here, but overall, if you look at the big picture, this is kind of just a larger consolidation trend. And what we're really looking for is this zone of resistance here, the $700 zone of resistance, because what happens is a lot of people bag hold. So you have people that buy in here or buy tops. They ended up buying at 780 or at a top, and then the market retraced really fast, faster than they can sell off their position. So they're still holding on to their coin. So what happens is they think, okay, well, once it gets back to 700, I'm just going to sell off my position and break even and start over. Well, or just get out of the market altogether. Well, with that, it puts a lot of selling pressure at the $700 zone. You can see that's kind of an average in between. If somebody had bought up here or down here, they just kind of want to, uh, limit the risk. So we see that twice. There's quite a bit of selling pressure on the 700. We see it try to go there once. It did a retest again, and almost exactly at that point we pulled back, right? And so right now we're still mid-range on this whole bull run or bull trend. And we broke the trend line back when the glitch finex kind of happened, here. But if I were to take this line and, go back to the washout that we had, so around here, we can put the trend line and see that the trend was broken right around here. Yeah, I mean, you can even break it up a little bit there, but the trend was broken in this area here. So we still have a lot of open air because we're mid-range from the 430 mark, but we've had this nice consolidation trend around, high swings around 700, and then it seems like we bounce off of around 600. I would say more like 630, and we're back there again. So what I do is there's two ways to play the market. You can react to the market or you can anticipate the market. Anticipating the market, like buying a position in anticipation that it's going to go one way or the other, is a lot more risky, but sometimes the payoffs are better. But in the overall spectrum of things, you're not really managing your risks as best as you can if you're anticipating the market. What I like to do is react to the market. So I set my points, like for instance, if we pass this zone of resistance, it's likely to go and retest 750 or even 780. But that gets even more riskier when you hold on to your coins up there. So what I do is I say to myself, okay, am I going to apply leverage if we pass 700? And if we pass 700 to like 710, then how much do I want to scale in at those marks? And how long do I want to stay in the market? So that's what I'm looking at right now. We have the halving coming up, which is creating a lot of FOMO or a lot of news articles surrounding it. So I think most of the people that have understood the impact that the halving can have, one way or the other, are already in this game, because you can see what I highly believe that the price right now that we're at is baked in. I don't think all of a sudden it's going to shoot up sky high unless there's some kind of trickery going on. Some whale, some guy that has a lot of money stacking the books to kind of create an artificial type movement to the upside or to the downside to maximize their potential returns in this market. I mean, if I had $1 billion or $100 million, I try to think what I would be doing. How I could influence the money to really create nice returns, and I think some of those guys are doing that. So what I'm here to tell you guys is mainly just keep an eye on the market. I just wanted to give you guys a breakdown of this zone of resistance, and then I've marked out the prior zones of support. So you just want to keep an eye on those and see what happens. And I want to tell you guys that we're still mid-range. We still have a lot way to go, or a far way to travel to the downside, and we can also retest 700 and break past that essentially. But that would, you have to look at the market capitalization. So anyway, yeah, that's what I wanted to say. I also wanted to talk about Bitcoin to gold. So we have gold that's around 1368 an ounce right now. And that was the price like 2 days ago. But gold's at a relatively high point right now compared to where it was, last year. Anyways, compared to gold, Bitcoin, and this is why I love Bitcoin so much. It's a digital fiat currency, and the only reason it's worth something is because people are willing to pay whatever the market price is, right? Well, with gold, the price is more elastic than Bitcoin, and that's what I think. It blows my mind that this digital code, these private keys, this intangible object essentially, unless you put it on cold storage or a USB drive, is just a code that people are buying, and they're willing to pay money for this encrypted code, right? And I think that's awesome. And I think the fact that the price of Bitcoin will essentially, I believe in the future, will be more inelastic than gold. Because if you think about gold, we have 1365. If the price of gold, say, doubled or tripled or quadrupled, or just it works like Bitcoin, where it went from, we know that Bitcoin had a $1,200 high of all time, but we know that price point is possible. Well, and we also know that there's only 21 million Bitcoins to ever be produced. And we also know that a lot of people lost their Bitcoins in the experimental phases of Bitcoin. So we know that number could likely be a lot less. And we know that 75% of the Bitcoins that have been produced have almost been produced. We're almost at 16 million Bitcoins. So people that lost their Bitcoins or don't know their wallet anymore, those Bitcoins are gone forever. So that makes Bitcoin even more rare. That means that the market cap is lower than 21 million. That number, maybe we can look at inactive wallets and things like that, break it down. Maybe I'll do a video on that. But I wanted to talk about the price compared to gold, because I was hesitant to really put it in the same category because of this. If the price of gold doubles, triples, like I just said, then you'll have a lot of companies, a lot of miners come online that weren't essentially financially feasible at 1368. But now that the price has doubled or tripled, you'll have a lot more competition in the market. So if the demand for gold stays constant, and then suddenly the supply increases because of new companies mining for gold, then what's likely to happen is competition, price competition. And what's likely to do is, if the supply increases and demand stays constant, then the value will begin to decrease because of the competition. And eventually, when the price goes down, then some of these gold mining operations will go, bankrupt or under, and someone will reign king. But with Bitcoin, no matter how high the value goes, you add more miners onto the network, they're not going to be able to mine more Bitcoins. It's kind of a constant rate of 10, it will soon be 12.5 Bitcoins every 10 minutes. If you have more miners, you might increase your probabilities of mining Bitcoins, but you won't increase the reward, and you're going to spend more money on your operation. So that being said, we have to look out for miners or mining pools because that kind of takes away from the idea of decentralizing the power of Bitcoin. If you own 70% of the mining power of Bitcoin and you find out that it's not really financially feasible anymore and you go under, that can slow down the network. But I think there's a lot of people that would love to take that spot. So yeah, I just see a lot of potential in the future for Bitcoin. I think it's amazing. I think it can revolutionize the way we do finance. It can get rid of the big banks that, have bullshit things like negative interest rates. There's quantitative easing. There's bailouts. There's bail-ins. There's currency controls, and there's these just exchange rate games that the big banks play. And with Bitcoin, you don't have any of that. And so I'm just trying to put my 2 cents out there, show you guys how what's so awesome is that Bitcoin, this digital currency, can eventually, and I believe this, be more valuable than gold. And yeah, I'm just so happy to be alive at a time. I wish I found out about Bitcoin 5 years ago, but I did when I did, and I'm happy that I'm in the game now. There's a lot of altcoins that would be very interesting because they're kind of like the backup to Bitcoin, and you have the Ethereum network and a lot of new technologies. But right now, Bitcoin has stood the test of time, and it's just really awesome. So that's what I have to say. The price is more inelastic than gold, which pretty big statement, but it's true. So I hope you guys are all doing well. Keep an eye on this market. I'll try to make some videos when I have more time. And take care. Treat each other like you would yourselves. And just, yeah, hopefully you guys are making those good returns, all right? Take care.